Hello Wolfpack, we're here on Bitcoin today. We're going to be discussing the bearish resistance support flip that occurred from the 17.5k price level, which of course was the June low that we've come up to and rejected off at this point in time. Going to be discussing the short-term price action, and of course we're going to be discussing the CPI result that came out yesterday. Let's get into it, guys. Alright, so unfortunately for Bitcoin, after a massive pump from the CPI release, which we predicted in yesterday's video, by the way, and we'll get into that in a second, we came all the way up from 15.6k, up probably around, well, we can just measure it right now, up around to the wick 16%, which is a huge 24-hour wick, but we closed 12% higher, and we closed right on top, in fact, right below where we found the June low, right? What this means is that we have performed at this point in time, right? It's not like in stone, but at this point in time, what we're seeing is a bearish resistance support flip from a critical resistance level, which is incredibly bad, all right? What we generally see, for those of you who don't know what that is, what we generally see, for example, with triangle formations, okay, we see, for example, the price consolidate from a triangle, the price eventually breaks down from a triangle, the price comes back up to the bottom of a triangle, knocks its head on the top, and then goes down further. It's the same thing with horizontal support levels. If we make this line horizontal, we can see the same thing has happened here in the last 12 hours, right? We've bounced on support for a long period of time, came below it, we come back up, reject, hit our head on the top, and at this point in time, based on the TA we have every indication to believe that we will be rejecting from that like that. That is what a resistance support flip is, okay? Now, look, there are signs for Bitcoin that it's not as bad as it seems. Perhaps it was a coincidence, perhaps, right? We have bullish divergence in the RSI. Eventually that will play out to the upside. Volume will most likely start decreasing. It's going to have to. I mean, we've seen volume. We haven't seen this high in years here. So it's going to have to start decreasing, at least 18 months. It's going to have to start decreasing soon, which means the selling pressure is going to start diminishing. People are going to start accumulating soon. That's just a natural thing you see after a big drop. And ultimately as well, I want to look into the fact that we haven't actually lost the 300-week SMA yet, right, on the weekly chart. We've still got 2 days and 22 hours until that candle closes. If we close below 17.9k on the weekly chart, that's a bad indication because it's the first time in history for Bitcoin that we would ever have lost the 300-week SMA. So we need to be holding that. But at this point in time, another thing I would like to say is this, right? The CPI decision was incredibly bullish. Okay, it was actually incredibly bullish. And it's reflected in the traditional markets as well. Traditional markets saw a massive green candle. S&P 500 doesn't get candles this big very often, right? We saw a candle of about 5%. Again, you don't see that very often, right? Why did we see that? Well, the expected inflation number was 8% flat, okay? We actually saw inflation come in at 7.7%. And the same thing happened with core inflation, right? The expected number was higher, we saw it come in lower. What this means is that the number came in 0.3% lower than what the market had expected, and the market had already priced in a lower number than the month before, which is 8.2%. So the market had priced in 8%, right? Before it was 8.2, we saw a pump, and now it came in even higher than that, and we've seen a continued pump to the upside. So we have no real evidence to say that the pump driven by CPI, right, being lower than expected, is over. It could very well still be materializing. And this is something we looked at before. Looked at this yesterday, predicted this entire move, right? You can watch yesterday's video. We predicted this entire CPI move. Sorry, my eyes are feeling a little bit weird, right? Essentially, we said, okay, Bitcoin has moved down massively due to the FTX news. In that period of time, Bitcoin was pricing in 21,300, okay? It was at 21,300. That's where it was pricing in CPI. We moved all the way down to around 15,000 before CPI came out. In that period of time, the traditional markets didn't move an inch, which means that Bitcoin wasn't pricing in CPI. It was merely reacting to fundamental events, meaning it was becoming dramatically overvalued, okay? Regardless what you think about FTX, okay? Regardless what you think about all of that, the fact of the matter is this, okay? One exchange failing, going down, getting wrecked. One exchange full of people losing money. I know it's the second biggest exchange. It's a big deal. But one exchange doesn't drag down the fair valuation of Bitcoin 27%. Simply not how it works, okay? So clearly we were oversold. We needed to see a bounce, and that bounce was going to materialize, in my opinion, whatever happened. I don't even think CPI coming in higher would have stopped that bounce. I think that bounce is always going to come. The question is, will that bounce continue? And that's a very hard question to answer. But what we can do is go on the shorter term chart, go on the 30-minute chart, for example, understand that this red line here on the 30-minute chart is the previous June low, and it's acting as vague resistance and support, and understand that we can have a trade signal here, right? We have an uptrending yellow line on the 30-minute chart, as you drawn, And we've got two targets, one of which at 16,100 USD and one of which at 15,600 USD. If we lose this yellow line, you could probably take a trade, depending on the TA, down towards one of these levels, take profits there, take profits there. Simple trade. And the same thing to the upside. But to the upside, we need to see a daily candle close above 17.5K before anything would actually materialize. If we get that daily candle close above 17.5K, that's really good news because it means that, look, as of right now, right, we had a range between 17.5K and around 25K. That was the range. We're below the range now. We're seeing a resistance support flip off the range. If we break back into the range, this small deviation from the range will be small enough to be seen as a fake out, and hence we would still be in the range and we can start moving towards the top of the range. So it's of the utmost importance that Bitcoin gets back above 17.5K very, very soon. It has to do it, right? It doesn't have to, like, I mean, in terms of like the health of Bitcoin, it would be very, very nice to see if it did that. Now, obviously, it doesn't have to do that in terms of a TA. It could go further down for sure. I want to briefly interrupt this video to talk about the BitGet Exchange. Now, the BitGet Exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KIC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Megaworld Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com and we'll get back to you with the full information and payment information if you're interested. Thanks, guys, for watching the advertisements. Let's get back into the video. And this is where we get into where is the actual support? Do we have actual support? And like, not really. We don't really have any actual support. The next actual support is probably 13.8K. That's a very strong support zone. And even that between 11.5K and 13.8K, that's the next actual quote unquote support zone. Until then, we're drifting between vague levels of support. And we just have to hope that the selling pressure isn't enough to bring us down all the way to that level, right? Which, it could very well not be. As of right now, Ethereum is seeing the same thing as Bitcoin, resistance support flip, not looking too good. And another interesting thing I'm looking at recently is the Bitcoin dominance chart. I'm looking at altcoins during this drop. I'm noticing that altcoins aren't really, it's hard to say they're not going down as much as Bitcoin, but altcoins, generally speaking, haven't really retested their June levels yet, where Bitcoin has dropped below it, which is interesting. We'll have to monitor that. There's not really much we can say about that right now. It could be due to irrationalities from high volatility. Generally speaking, all that pans out. But throughout this entire bear market, we've seen a clear difference between this bear market in 2018 in regards to how Bitcoin and altcoins interacted together. Bitcoin is still the leader of the market, but Bitcoin dominance is not trending upwards in the same way it was in 2018. What does that mean? It's very hard to say what it means, to be quite honest with you. It does mean that, I suppose, there's many explanations for it. One of which could be stable coins stealing liquidity from Bitcoin, one of which, and altcoins, one of which being there's way more altcoins, and so it's not that Bitcoin's losing dominance, it's just that there's so many altcoins now in comparison to 2018, it's very hard for Bitcoin to gain dominance. There's many explanations for that, other than Bitcoin's dying and Ethereum's going to take over. I think that's a very surface level point of view to have. I just don't see the evidence for that at all. Even if you look at the drop, the big drop we saw, Ethereum dropped, what did it see? Well, it dropped, let's see, 35%, whereas Bitcoin, dropped, let's see, around 27%. So it's clear that Ethereum's still dropping more than Bitcoin. Obviously, when Ethereum goes up, it goes up more than Bitcoin, but that's very normal. That's what a lower market cap coin does in regards to a high market cap coin. All that's very normal in my opinion. I think it's too early to make any conclusions there, but it is something worth monitoring. So ultimately, the main point of this video is this. Again, I'll keep reiterating this point. 300-week SMA is very important. 2 days and 22 hours to get above that. CPI came in bullish. Right now, we're seeing a resistance support flip off of a major resistance zone. We have to get above that. We have to. That's very critical. We close the daily candle above 17.5K. Very critical. 17.6K, actually. But we'll see what happens there. So we have to wait till tomorrow, and we'll get an update on that. So thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video. Cheers.